Akwabere Mushan. I don't see my pie. Nane Juma.
Okay, so we can now continue the lessons now. Now, when we are talking about allowable expenditures, as I told you, it must qualify for, it must have two characteristics. It must be wholly, it must be exclusively, it must be necessary expended or necessary incurred for the purpose of generating the business income. And also, it must not be of a capital nature. That is to say, the expenditure must be of a revenue expenditure. Now, number one, an expenditure like research and development expenditure is an allowable expenditure. Now, they normally say something in taxation called the deductibility rule. Deductibility rule. So when we talk about deductibility rule, or for the expenditure to meet the deductibility rule, it must be wholly, it must be exclusively, it must be necessary. It must not be of a capital nature. So they can use this terminology. I get in the deductibility is the same thing, the allowable expenditure. So what criteria would the expenditure meet before you deduct it from your gross profit? That's the deductibility rule. So these rules are the deductibility rule I was talking about. Now we have number one, the research and development expenditure. So when we talk about research and development expenditure, it's an expenditure that is aimed at creating new products and improving on old products to meet customer satisfaction. So when you talk about research and development expenditure, that is it. So when you have incurred an expenditure like this, an expenditure you incur aiming at bringing out new products, bringing out the improvements on new products, we are talking about what? Research and development expenditure. And such an expenditure is termed as an allowable expenditure. So you are allowed, okay? So research and development expenditure includes an expenses incurred by a person in the purpose of developing the business of that person and improving business product or process, and excludes an expense incurred that is to otherwise include all costs or blah, 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 blah. So if at the end of the day, the expenditure is of a capital nature, you exclude it. If it is of a revenue nature, you include it. So first of all, research and development expenditure is an allowable expenditure. So when you see it in the question, it's an allowable expenditure. Now, bad debts are allowable expenditure. But take note, bad debts are allowable expenditure, but provisions for bad debts are disallowed. So when you see provision for bad debt, you disallow it. I get in? Provision for bad debt are disallowed. Bad debts are allowable expenditure, but provision for bad debt are what? Disallowed. So when you see provision for bad debt, you disallow it. So they can tell you this is bad debt in the question, then the food included in the bad debt is a provision of this. Master, disallow the provision straight away because provisions are disallowed. So let me read what he said. He said, bad debt refers to a debt claim of a person in respect of which that person has taken all the reasonable steps to pursue payment and which that person reasonably believes will not be satisfied. Bad debt claims are therefore allowable deduction for tax purposes. However, these conditions have to be satisfied. So in an attempt that we are disallowing provisions, the bad debt itself must satisfy this condition. And the first condition is that the amount of the debt claim should have been included in ascertaining the person's assessable income. What it means here is that the debtor should be included in your account. So you must have those debtors in your account already before you can claim that bad debt. So if you have not included the debtors in your account, how then are you claiming that bad debt? So the person on whom you are claiming the debtors, the bad debt on, might have been your debtor or should have been your debtor. Number two, the debt must be specific and it must not be a general bad debt. So the debt claim must be an advance made by that person in a normal course of business, other than advances made on capital account. So we have specific bad debt and then we have general bad debt. So when the debt is specific, that the debt is on Anita, the bad debt I'm claiming is the bad debt of Anita, then that bad debt is allowable. But when I say that bad debt is a bad debt of level 300, level 300 consists of a lot of people. So if it is general, they disallow it. But if it is specific, so the bad debt you are claiming should be specific on a particular data, then you can allow it. Now, then the last one, they said that it is therefore stands to reason that the general bad debt provisions are not allowed. So general bad debt are the same as the provisions bad debt I was talking about. So general bad debt are also termed as a provision for what? Bad debt or provision for doubtful debt. So in a nutshell, specific bad debts are allowed, general bad debts are not allowed, or general bad debts are disallowed. So you should be able to know it. So we have tax losses but void given in a year. Yes. Amatefio Samuel, your hand is up.
Yes, please, sir. Sir, please, I want to ask a question on the bad debt.
Okay.
Sir, please, if the question we have bad debt, but they didn't give us any footnotes, so I want to ask that, like the bad debt given to us, can we take it as a general bad debt? Therefore, we will not record it, or
No.
we will take it as a specific bad debt.
Take it as a specific bad debt. Okay. Once there's no footnote attached to it, it is specific. Okay. But if there is a footnote attached, then it means that they tell you the general part of it. So when the bad debt is there and it is silent, it is specific bad debt. Okay. But if it is there and then they add a note, then it means that there is a general inside, and then they will tell you the general aspect of that particular bad debt. Is that right?
Okay, sir. Yes, please.
Okay. All right.
Sir, please, thanks.
You're welcome. All right. So let's look at other ones. We have tax losses but void for a given number of years. So tax losses are allowable. You have repairs and improvements. So repairs and improvements. Now, for repairs and improvements, so you have repairs and then we have improvements. So repairs of a building is allowable. The improvement in what terms? Are we extending the building? It's an improvement. Are we painting it? It's an improvement. So when you talk about repairs and improvement, you must ask question. And the question you are going to ask should be capable of meeting the deductibility rule before you allow it. If it doesn't meet the deductibility rule, you disallow it. Then we have research and development, as I told you already. We have foreign exchange losses. So you have transact business in dollar, and then you have made some losses, okay? So a typical one, let me cite a typical one in my organization for you. We have paid for hotel bills for people who are supposed to travel outside the country. That was somewhere in 3rd March. Okay, we fully paid everything via Visa card. And then the flight was due to go. And then, because of Corona, they've canceled the flight. So once they've canceled the flight, the people cannot go. They cannot fly outside the country. So the hotel booking too, we have to cancel the hotel booking. Now, the money we paid, over 50-something thousand to the hotel. Now the hotel is supposed to refund that money to us back. When we were transferring the money, we paid 50-something thousand. to the hotel. But when the hotel was transferring the money back to us, the money came in, it was around 45 or 46,000 thereabout. What happened? At the time we were paying the hotel that money, the dollar rate was very high. Are you getting it? At the time they are paying us, the dollar rate is very low. So they will be gaining. So they will pay us very small amount of money. But if we, at the time we are paying and it is low, then it is to our advantage. So you can see that the difference of the 5,000 that left the money was an associated to what? Foreign exchange what? Losses. So for us like this, such a foreign exchange losses, you are allowed to include it in your account as an expenses. So in my account for 2020, if I put in the foreign exchange loss of 5,000 Ghana cedis, GRA is not going to falter me, or GRA is not going to ask me any question, because the loss I made was legitimate. Are you getting it? So that is an example of a foreign exchange losses we are talking about. Then incentives for hiring recent graduates. So you have placed an advert, and then you want to recruit people. So under the interview, you give them their transportation allowance they have spent. Sometimes you can go to some interviews and then they give you transportation allowance. Sometimes you go to an interview and then they serve you lunch. So those are some of the incentives we are talking about. Then financial cost. When we talk about financial cost, it must meet the criteria of the deductibility rule. So there are certain expenditures, when you see them, you must be able to ask what? Questions. And those questions should lead you in meeting the deductibility rule. Now, another controversial expenses that people make, you see, the accountant, they are very, very smart. They know how to channel the money. Then they will come and write it big. Okay, good. So they said they go and do donations, like this donation they are doing to the COVID-19 thing. I get me. You go and do donation by feeding people by the roadside. And then you also do donation into the COVID-19 trust fund. The two, one will be disallowed by the revenue authority and one will be allowed. Which one would the revenue authority allowed? And which one would the revenue authority disallowed? I'm going to unmute somebody and the person will answer it. The question again, you have made donation into the COVID-19 trust fund established by the government. And then you have also made donation by feeding people by the roadside. You have all done donation. But these two donations, one will be allowed by the revenue authority and one will be disallowed by the revenue authority. So Eric Sikapa, you are on floor.
Okay, sir. The donation to the trust fund will be allowed.
And the donation to the roadside distribution will be disallowed.
Yes, please.
Okay. So let's hear from another person. And see. Nick, you are on floor. Nick, you are on floor.
Hello. Yeah. Can you hear me?
Yeah, we can hear you clearly, so speak up.
I can hardly hear you.
You can hardly hear us.
Hello.
Okay, it seems Nick. Okay, Nick, don't worry. We will continue without you. Let me see if I can unmute another person to talk. Fred Williams, you're on floor.
Hello?
Yeah, Fred Williams, you're on floor. Speak.
Hello? Yeah, we allow the contribution made to the COVID-19 fund, but the one made to the roadside will not be allowed.
That's good. That's good. So that is basically what I was trying to say. So when you see the expenditure, because you have the idea of the deductibility rule in mind, based on the deductibility rule, you'll be capable of allowing and disallowing an expenditure. Are you getting me? And that is your guiding principle in allowing and disallowing an expenditure. Good. So donations. They said the following are the allowable deductions for worthwhile causes. So if the donation you made is to a worthwhile cause, like you distribute to Osu Children's Home, you have distributed to any charitable organization. In fact, you have distributed to a registered charitable organization, then it is allowable. So it's not just anybody who just set up an NGO, then you see anything called an NGO, then go and donate to. If the NGO is not a registered NGO, it is going to be what? Disallowed. Okay. Then when we have your donation in terms of developing of a rural urban area, so you went to a typical village like Bunkuruku Yoyo. Have you heard that religion before? Then you go and mount electricity for them. You go and mount electricity posts for them, or you go and give them water, pipe-borne water, like what MTN is doing. They go to the hinterlands, then they go and give them toilet facilities. They go and give them this, they go and give them that. I get it. So when you go to those rural areas and you do these charitable things over there, at the end of the day, it is what? Allowed. That is what the law is saying, or that is what the deductibility rule is saying. You have donated to the development of sports development or sports promotion. So you have made donation to the developmental of what? Sports. Doesn't mean that you should just wake up and go and donate to any sport thing. They develop to the sports ministry. Are you getting in? Good. It is an allowable expenditure. Are you getting it? So your book here is saying that contribution to charities, that is contribution to charitable institution or fund approved by the government. Example, the Osu Children's Home is an allowable expenditure. Scholarship contribution. So you have donated into the National Scholarship Secretariat's Fund, or you have donated to the GET Fund. It is allowable. Donations for rural urban development approved by the government. It is what? Allowable. Donation for sport development and sports promotions approved by the government. Approved by the government. So they are not saying you are donating to a football club. We are donating to promotion of a sport. So like what McDan Shipping is doing. McDan is trying to unearth young talent. So you say McDan something. These are what we are talking about. Donation to government for worthwhile causes approved by the Commissioner of Internal Revenue. So you are donating to the COVID-19 fund, you are donating to the 2019 or the 2015 circle disaster fund or whatever. It is all what? Allowable. So this is another expenditure that has a lot of controversy about it. So when it is there, you must make sure you seek certain information about it. But another one that there is no controversy about it is rent paid for business premises. When you pay rent, it is what? Allowable. I get any. When you pay rent, you what? Allow it. But when you pay the rent in prepayment, so you have prepaid the rent, you have paid the rent in advance, then it means that the rent that is attributable for this year is allowable. The one that is attributable to next year or the subsequent years is what? Disallowable. So at the end of the day, if there is a prepayment, you disallow it. Then number two, if you have paid rent, but part of the rent you paid, let's say you pay rent for a 3-story building, and then you are using only the 3rd floor for the business, and then the floor 1 and the floor 2, you are not using it for the business, then they'll disallow the floor 1 and floor 2. So for example, when you go to, let's say, a Tema, Obinim has a premises where the premises, he has stores around it. And then inside the premises is where he does his church. That doesn't mean that I've gone there before, but I've passed there before. Inside it is where he does his church. So at the end of the day, if Obinim is supposed to pay rent for that land, I get it, and then he is paying rent covering all the land, and then he's putting it in his books of account that he's paying rent, the GRA will go and disallow the rent covering the part he used for the church. Because the one he uses for the church is not business related. I get the scenario. So that is basically what this particular aspect of the work is talking about. Then I talk about the repairs and improvement already. So you should know. Then you have advertising. Good. This is another controversial one. Advertising. When you make advertising and the advertising you made is in a form of a temporary nature, you made a radio advert, you made a TV advert, it is allowed. Or you make daily graphic advert, it is allowed. But when you go and mount billboard, they disallow it. Immediately you mount billboard, they disallow it. Immediately you do an advertisement that is of a permanent nature, they disallow it. So in taxation, they call it mounting of a permanent neon sign. The neon sign, it is spelled N-E-O-N, neon sign. So mounting of a neon sign is disallowed. That is, you are mounting billboard or you are mounting what? Signpost. It is what? Disallowed. Now, defalcation on the part of employees. So when you talk about defalcation, we are talking about mistakes. So when employees made mistakes and it brought about losses. So when employees made mistake that arises in losses to the company, it is allowed. You can put that one in the expenditure aspect and allow it. But when the manager made a mistake that brought losses to the company, disallow it. So you should know it. Defalcations on the part of the employees are allowed. Defalcations on the part of the manager are disallowed. Okay. Then legal and professional fees. So when you pay legal and professional fees, one, all things being equal, they are allowed. In respect that the legal and professional fees that you paid are one, to defend the right of the company. So somebody sent you to court and you want to defend the right of the company. You pay the lawyer, that money is allowed. Protecting an asset. People want to take your land from you, or people want to seize your car or whatever, and you went to fight them in court, it is allowed. Collection of trade debts. People owe you and you send them to court to collect your money. That money you pay to the lawyer, it is allowed. Current company matters. Maybe an employee send you to court or labor union and whatever, it is allowed. But it is disallowed in these specific areas if you pay legal fees for the formation of a company. So when you are about to form the company and then you pay legal fees, it is strictly disallowed. So when the legal fees you pay is in respect of formation of a company, it is allowed. If the legal fees you paid is in respect of acquiring new assets, it is disallowed. Then if the legal fees you paid is in terms of what? Fighting tax appeal. You the GRA has taxed you so much and you don't agree, and then you have sent it to court to fight the GRA. Then later you came and fight them, and then you got the gas to even put that money in your account again. They will disallow it. Are you getting it? So these are the circumstances under which legal and professional fees are disallowed. Now, when you also incur fees of issuing of shares, you went to issue shares and then you pay fees. So launching of IPO, you pay those fees. They are disallowed. Are you getting it? Good. Now, subscriptions are also allowed. Okay, subscriptions are also allowed. That is if you are paying to your parent body. So let's say you are an accounting firm and then you are paying subscription to what? ICA Ghana. Okay, it is allowed. You are a legal firm and then you are paying subscription to Ghana Bar Association, it is allowed. I get any, but anything other than that, it is what? Disallowed. So if you are paying to a trade and a professional association, it is what? Allowed. But if it is not to a trade and professional association, you are what? Disallowed, or you disallow that one. Okay. Then traveling expenses, they are also allowed. Salaries and wages are allowed. But when you talk about general expenses, what is general expenses? It is disallowed. So you don't write anything like general expenses. So they will tell you when they say to your account general expense, they will ask you this general expense for what and what and what and what. I get any. So general expenses, you must give a lot of breakdown to it, and then they will allow it for you. But all things being equal, general expenses are disallowed. Now, fines and penalties, they are not allowed. When you see fines and penalties, you have breached the law and the government has punished you, and you pay that money to the government, and then you want to pass back and take that money back. No. So you are driving carelessly, and then they fine you, or they say don't go out, and then you are aimlessly walking by the roadside, and they catch you by this time and fine you. Then you are adding it to your account. It will be disallowed. Okay. But when you pay interest on loan, they are what? Allowed. Okay. Then capital allowance are also allowed. Capital allowance are allowed in the sense that they have disallowed depreciation for you, and they are allowing you to bring capital allowance. So in place of depreciation, capital allowance is allowed. Then carry over losses. Okay. Carry over losses are also what? Allowed. Okay. So these are basically some of the allowable. So when they ask you to mention allowable, at least you'll be able to mention 10 off head. Okay. Then you have the disallowable expenditure. You have disallowable expenditures over there. So income tax, domestic expenditure, bribes. You want to pay bribes, and then you also want to include it in your books. When you saw idea, they will slap you. So bribes are disallowed. Okay, don't go and pay bribe and put it in your book. In fact, as an accountant, you don't write bribes. At least you write protocol expenses. Then dividend. You don't pay dividend and include it in your books. So dividends are also what? Disallowed. I get your name. Then capital expenditure. Any expenditure that you have incurred that is in the form of a capital expenditure, you disallow it. Then any domestic or private expenses. Now I have a question here. Why would domestic or private expenses be disallowed? And the answer I'm expecting, I want you to explain the answer in terms of the business entity concepts, and also why and how you understand drawing. So when you understand this one, you'll be able to explain why any domestic or private expenses are disallowed. And your expenses should link the explanation of drawings for me. Your explanation should link the explanation of business entity concept for me. So I'll be calling you, then you give me your answer. But in the meantime, Mercy has a question. So Mercy, let's hear you. Mercy, you're on floor.
See, mommy, I don't have question. I want to answer your question.
Oh, good. In fact, before I even finish my question, he has an answer.
Okay, so ma, please,
Yes.
when it comes to the business entity, they said the owner of the business is separated from the business itself.
Good.
So your private affairs doesn't affect the business.
Good. So why do we have drawings in the books?
That is why you. Sema, please come again.
Why do you have drawings in your books?
Hello?
Why do you have drawings in your books?
Oh, to be fair, I'm not with the book then. By then, the question
No, I'm not saying,
beside.
as an accountant, why do you have drawing
Mhm.
your financial statement? Level 100, financed by, say, capital, net profit, less drawings. Why
So,
do you need drawings? Yes, your husband wants to save you, Eric.
So I'm thinking about it. I'll come back again.
Yeah, Eric,
So,
your floor.
she's not my wife. My wife is at home. Okay, so we put drawings in our books because because the money has been used personally by the manager or a member of the company. So that makes it drawings.
Okay, so the money was used for private affairs. Is that right? I think that's what you wanted to say. Okay, so Amatefu Samuel, hand is up. Let's hear you.
Yes, please, sir. And so I just want to add to the reason why drawings appears in our account.
Okay.
The reason is that like the drawings try to reduce our capital that we use to start up the business.
Okay.
So with the business principle, we state that the person is different from the business. So we introduce the drawings to indicate that the capital that we have introduced, the individual which is different from the business has taken something for his personal use, which is reducing the capital.
Fantastic. That is good. Fred Williams too is on floor. Let's hear you.
Hello.
Yes, you're
I
on
just
floor.
wanted to add to what we're saying, but I think Sam has already clarified certain things of it already.
Okay, all right.
Also, the drawing it reduces your.
Okay, good. So technically, the owner has taken something from the business for private use, so it has already reduced your capital. Are you getting it? So there's no need for you putting it in the expenses again to reduce what again? Are you getting it? So technically, that money is no more in the business, so you don't need to put it over there. So any expenses the owner has incurred, which is of a private nature or is for his personal use aside the business use, must be disallowed. That is why I cited an example that the manager went to entertain his girlfriend and the manager also went to entertain his business partners. Which of these two will be disallowed? And I know that all of you will tell me that, oh, the one that is for the business partners should be allowed, and the one that is for the girlfriend should be disallowed. So this is how we treat it. So general provisions, as I told you, are disallowed. Depreciation of fixed assets are also disallowed. When you pay income tax over there, you must disallow it. Drawings too must be what? Disallowed. So most of these things, or these are some of the disallowable expenditures that we have. Now, when we come to the corporate taxes, we have, as of now, who knows the corporate tax rate in Ghana? The prevailing corporate tax rate. It's not the one you use in the first semester. Yes, Eric hand is up.
25%.
25%. Good. Mercy's hand is up. Let me hear Mercy.
I have said it.
What did
It's
he
25.
say? He said 25%.
25%.
Okay, good.
Yes.
So corporate tax rate in Ghana now is what? 25%. So when the question is given to you and it is silent, you should know that corporate tax rate you are going to use is what? 25%. I get it. Until you have been given another rate, you use that one. Now, when the company is situated in Greater Accra, 25. If it is situated in other regional capitals, it is 18.75. So they tell you that the company is situated in Koforidua, is situated in Tamale or whatever, 18.75. When the company is located outside the regional capitals, it is 12.5. So outside the regional capitals, and it is situated in somewhere like in Sawam or whatever, 12.5. I get it. If the company is a hotel, or the company is engaged in the hotel and industry or the hospitality industry, it is what? 22%. Companies engaged in mining business is 35. Okay. Companies engaged in, so like say Anglo Gold Ashanti, 35. Export of engage in upstream petroleum like Talo Ghana, they will pay 35%. I get any. So these are some of the things we are supposed to be knowing. You should know where the company is situated, what the company is into. Other than that, anything other than that, then the company must be taxed what? 25%. So if the company is none of this, let's say it's a consultancy company, then it should be 25%. I get in the scenario. So I'm going to give you some 5 minutes break to refresh yourself. I'll post the practical questions we are going to be looking at on the page, and then I'll join you back again, and then we continue. Okay. All right.